customary wrap on environmental insurance is that it's a specialized product only purchased by companies with an exposure so obvious that they're legally required to carry some sort of cover. 10 years ago, that might have been the case. Today, however, a combination of severe weather events, expensive lawsuits, and highly publicized environmental risks are leading many smaller companies to consider their exposures and seek appropriate coverage. Insurance Business America recently visited the offices of Freeburg Environmental Insurance in Denver to gain some insight on emerging trends as well as some opportunities for producers in this market. Freeburg is a highly regarded specialist in developing, marketing, and underwriting environmental insurance programs. We sat down with 20-year industry veteran Stacy Brown, the president and managing partner of Freeburg Environmental, to get his take on the issues in this installment of a 4-part series.
As there have been some very high-profile environmental incidents in the past 5 years, that has certainly raised the awareness of environmental insurance and how it can protect property owners, facility owners, and business people from environmental risk. I think there's always been a traditional base of facilities that look for environmental insurance, like landfills or wastewater treatment plants, facilities with very obvious environmental exposures. But I think in the past few years there's been a slight shift where there are other types of facilities that are now considering purchasing environmental insurance coverage. For example, we had a number of years ago an incident where there was a spill of molasses. You wouldn't think that molasses would be an environmental pollutant, but if it's spilled in an uncontrolled way, and if it gets into a waterway, it can kill all the fish in that waterway. So that's a circumstance where a facility that's handling a very large quantity of a raw material that's not really hazardous in and of itself, but when it's released in an uncontrolled way, creates a pollution condition. I think in two particular areas. One would be environmental impairment liability, and that's coverage for a fixed facility. So the molasses example, that was a fixed facility and they don't have any type of contracting exposure. So we are providing coverage for a number of fixed facilities across the country. Then you have contractors, and contractors certainly need environmental coverage as they have many circumstances where they could generate a pollution condition. From a small renovation contractor or remodeling contractor who has the potential to disturb lead-based paint in a home or commercial building, to an HVAC contractor who might install some equipment that may cause mold, or a plumber that may cause mold or Legionella in a building. Those are two examples of the types of contracting operations where they have the potential to cause pollution conditions. You also have earth-moving contractors. When you move large quantities of dirt, if that dirt is not controlled during a rainstorm, the sediment can cause pollution in waterways. And that's another circumstance where perhaps having a contractor's pollution liability policy in place would protect that contractor from having a major cost of remediation.